Hey, this is Dave Downs here. I am welcomed by Dave Holzer and Jesse Brown from RASI. We're talking a little bit about closing out the end of a period of time, whether that's a week, a month, a 4 week period, whatever calendar schedule you may be on. We wanted to provide some tips and tricks on the things that you should be focused on and keep your upcoming period really focused and goal oriented based on your current results, what you're doing right now. Dave, I'm going to kind of tee this first question up for you. What are some of those things that you recommend a client or someone look at if they're closing out successfully the end of their restaurant period?
Hi, Dave. So there's five main items that we want to look at and focus on at the close of a period, whether it's a week, a month, a 4 week period, or whatever your period may be that you're looking at. We're focusing in on your COGS. That's probably the one thing you're mainly focused on, the COGS of the business, your food costs, your pour costs. Labor would be another very important item. Obviously, your employees are working for you. You have front of house, back of house, other payroll that you are managing and overseeing. Expenses, that would be items below the line. The analysis, that is more, focusing in when you identify a category, you dive into that, whether it be an expense account, a COGS account, a balance sheet account. And then the last one would be a reconciliation. That would be diving even further into it, figuring out where it was coded, what items you need to look at, what sort of adjustments you may need to make.
I don't know if you planned it this way or not, Dave. COGS, labor, expenses, analysis, and reconciliation, that spells clear. And if you want to get a clear financial picture, it only makes sense to do this successfully at the end of each period. I love it. That's perfect. Jesse Brown, in some of your experience in dealing with, in working with our clients, and I'm going to say dealing with, in working with our clients, COGS analysis, what kinds of things are they doing? What kinds of things are you seeing in that process? And what kinds of things are important for them to consider as they're kind of closing out each period?
Yeah, so I think COGS tends to kind of be the bread and butter for the restaurant. It's where the managers can make the most impact, and it's where really the day-to-day is really focused and driven. So it's going to be your big ticket items, your food cost, your labor, what's really important to get that food to the clients. So what we're seeing is, people are drilling in. They're trying to find ways to save money, especially right now during COVID. So they're looking for purchasing programs. They're looking for ways to cut back on costs. They're looking for ways to save labor and increase the benefit to the client while doing these items.
It's interesting that you mentioned kind of rebating programs and things like that to be able to save money. Dave Holzer, I'm going to kick it over to you. Trending analysis. What kinds of things do you recommend in being able to help a client identify if there's an opportunity somewhere in their food or even potentially in their pour costs? What kinds of things are they looking at?
Yeah, so when you're looking at a period, you're looking at individually at the period, but you also want to make sure you're looking at the trends. Maybe the last 3 periods. You look at your overall food costs, your meat costs. How is it trending over the last 3 periods? And also make sure you're looking at the period from the previous year as well.
Yeah.
What was your total food cost last year as compared to this year? And in the current situation with the pandemic, that might be a little difficult to compare the two. But still, the overall kind of idea there is to look at those trends and see where there might be areas of opportunity, maybe to negotiate a price with your vendor, or cut food costs another way.
Oh, yeah, I love that. It's perfect. I think it's fantastic and great advice for just being able to not just focus on the current period that you're in, but to also look at those historical trends. And I love the year over year example and going back the last few years. Shifting gears just a little bit, labor side of things. We're going to kind of switch into the L of the period end closing, labor kinds of things. It's similar to cost of goods, but a little bit different. Jesse Brown, on labor trends and opportunities, what other kinds of things should someone consider? Again, we're kind of focused around that closing out a period end.
So when you're looking at your period end and looking at your labor, you really have to, when you're looking back at the trends, understand what was going on at that time to understand why your labor cost is what it is.
Yeah. And for both of those points, COGS and for labor, that always brings me back to budgeting and making sure that you're really looking at this in the scope of budget versus actual in a period end review, and even more frequently in the ongoing throughout the course of each week and every weekly analysis, really tying it back to the budget. Such an important resource, especially now more than ever. Cool. Other expenses. So this is kind of one of those things that often is a little bit more overlooked. You both hit the nail on the head. Labor and COGS are dissected daily in most restaurants. What kinds of things, Jesse Brown, should somebody be considering when they're dissecting the below the line costs on the P&L? What are they looking for?
Yeah, I mean, there's a lot of stuff that gets hidden below the line that you really can make a difference with. When you're looking at your overall supply cost, what you're needing to buy for the restaurant, when you're looking at your rent or your common area maintenance, have you talked to your landlord? Is there any room for negotiation? Mm-hmm. Are you really maximizing those costs to yourself? And have you really looked at what opportunities are there for you?
I like that. And from a former operator, I always scrutinized over comps and probably to a fault in a lot of ways. Dave Holzer, just in your working with clients over the last, I don't know how long you've been with RASI, probably 8-9 years, longer than I have. And in all that time, what kinds of things have changed? What is updated in terms of comp analysis and looking into those kinds of things?
Yeah, so with the comps, about 2 years ago, RASI developed a standard set of comp GLs. And when I say GLs, general ledger accounts, basically to separate those comps in more detail, going from employee discount, I'll call employee discount, VIP promo, I'll call VIP promo. So separating those out into a more, granular detail of your comps. For compliance reasons, first of all, there's tax implications with use tax and everything like that, but also to, show the client when they're looking at a P&L or doing a period review, these are the comps and, your employee discount is this. It's not all lumped into one category, say, food discount or bar discount. It's a little more granular detail.
Awesome. Okay, so of the acronym CLEAR, we've covered 3, COGS, labor, and other expenses, or E for expenses. Shifting gear now, this is kind of really the nuts and bolts, the analysis. We've done the kind of review of maybe trends and looking at opportunities in the first 3 letters. Now we got to get the devil in the details, analysis. And this goes beyond just the P&L and expenses. This goes into the balance sheet and maybe even statement of cash flow and GL registers. Let's talk about some strategies, Jesse Brown. As from the accounting department, what kinds of things are you coaching folks along in as you're working with them, our clients, and how are you teaching them to take that analysis? What kinds of things are you recommending?
Yeah, so I think the big part of analysis is once you kind of understand what's going on with your labor, your COGS, your expenses, is that now you're ready to move the ball forward. How can you make an impact? What can you change that will really maximize your profits or maximize your business and provide better service to the clients or to your clients, your customers? So, for example, if your labor costs are really low and your comps are really high, you can make the analysis that you need more people, that guests are leaving unhappy because of possible understaffing. You can also, look and see, do I need to change my menu prices? Is my cost of goods too high? Do I need to look into a way to lower those costs?
I love that example that you threw out on the relationship between comps and labor, because I think that is something that's often overlooked. And from an operator's perspective, they both seem like they're negative, and they're not always. They can tell you a lot. I love that. Dave Holzer, beyond the P&L then, so when we're talking about balance sheet analysis and kind of looking into some of those things, give me the top 3 or 4 things on the balance sheet that I should be looking for as a business owner. What kinds of things am I focused on, and how do I make sure that I'm making an impact?
Yeah, and I was going to bring up the balance sheet. That's an often statement that gets overlooked. It's not your income, it's not your COGS. It's not as entertaining to look at. But the statements do tie into each other. Your day-to-day business activity can tie into the balance sheet, and it could potentially, hide, or your expenses could code to the balance sheet in error. So main accounts that we're looking at on the balance sheet. First one is your petty cash. That's your cash drawers, money in your safe. Any sort of petty cash you have laying around the restaurant. The day-to-day operations of the business affects that petty cash number. There may be a paid out. You take out of your petty cash to go get produce. If that doesn't get booked into your financials, you're missing a produce expense. On the other side of it, the liability side, credit card tips payable. That's a common account that we're always looking at on a period basis. You collect X amount of dollars in credit card tips throughout the week. You pay that dollar amount on to payroll. Ideally, that should be the same amount paid out. If there's any discrepancies, you doing your period in review, you're going to see a balance in credit card tips payable and question, hey, do I owe employees money still, or did I overpay employees?
Yeah.
It could go two ways there. So those are probably the two main accounts we're looking at. Going back up to the asset side of it, there are, you have your restaurant equipment, your operating equipment, like your salad tables, your freezers, stuff like that. Those are assets that your CPA depreciates that cost over a certain amount of time. If you code a $50 expense there, $200 expense to an asset account, that's not hitting your P&L as an expense. And that's potential. Then your CPA is going to see that at year end and have to reclass that, potentially charge you for, the adjustments or the time it takes them to review your statements. So looking at that balance sheet as well on a period basis is very beneficial.
Cool. Jesse Brown, on the liability side, I got some big loans to open this restaurant. What should I be looking for?
Yeah, you want to make sure on a period basis that you are correctly coding your interest and your principal. A lot of times we see full payments go to the principal and you're actually going to understate what you owe. And then also on the P&L side, not expense out that interest cost.
That's right. Yeah, that interest is an expense, not part of the loan. So I love that, being able to make sure that you have those. To tie all this together, a successful period end review has to be reconciled. We have to be able to tie everything out. And Dave, you mentioned the P&L and the balance sheet are so interactive and really tie out together. So should the bank account. And Jesse, I'll kind of tie this back to you. In terms of reconciliation, I'm closing out my period end. What do I need to be focused on? What should I be working towards?
Yeah, the very first thing you do should be reconciling that bank account. If you can't verify that the information you have is accurate, then really there's no point in even starting to look at it. And when we talk about reconciling accounts, we're not just talking about, your operating account. If you have credit cards, if you have cash in the restaurant, all of this needs to be reconciled before you even start looking at your numbers. Because to go back to Dave's point, you want to make sure you have all your cash paid outs put in. You want to make sure that all your expenses you paid out with a credit card, and really even those loan balances are all accurate before you even start to look at, how profitable you were for a period.
It's so amazing to be able to kind of put a finer point on that. And Dave, finally, we're kind of getting close to wrapping this up here. Any other final thoughts that you have on successfully closing out a period, making sure that when I report those numbers to maybe my owner, or if I am the owner and I'm putting those together to do some deeper analysis, what's the last little piece of advice you may have for any of those folks working in that role?
So yeah, after, as Jesse mentioned, after the reconciliation is complete, first of all, that's kind of your grading piece. If you're looking at hundreds of reconciliation questions, the statements you were looking at in between the period where it closed and where it was reconciled, those statements mean really they're not accurate information. So use that as a learning tool to your data entry. If there's areas of opportunity, to reduce those bank rec questions. That's definitely one main point you want to look at. And then also too, you identify, accounts that may be off, that may need adjusting, making those adjustments to the financials. You can identify them, but if you're not adjusting the financials, you're not doing yourself a service of your period review.
Awesome. Jesse Brown, any final thoughts from you?
I would just say, making sure that you're reconciling and reviewing everything and really going over a period end review on a regular basis is so important. It doesn't do you much good if you're looking so far into the past that you can't make the adjustments. So really deciding on a time frame that works for you and making sure you're making those corrections right away will really allow you to pivot when you need to.
That's so amazing. So to be clear, COGS, labor, other expenses, analysis, and reconciliation to really tie out that period every at the end of each period. Jesse Brown and Dave Holzer, thank you guys so much for your insights and your time today. I know you guys are busy, and I really appreciate it. So thank you so much.
Our pleasure, Dave.
Thank you.
Thank
right
you.
on. Have a great day, guys.
You too.
Too.